Carl founded has limited liability. The idea behind limited liability is that starting a business is plenty risky as it is. About a third of new businesses fail in the first 2 years, and about half of new businesses fail in their first 5 years. Many people who are willing to risk their entire investment in a new business are not willing to risk everything they own. That's just too dangerous for most people. Limited liability seems strange to some people, but it isn't a new idea. Some experts say that shipping merchants sought and obtained limited liability as early as 2,000 years BC. Another reason to think of corporations as a bag of goodies is that it's easier to realize that a bag of goodies is nothing more than a bag of goodies. We don't want to confuse the managers who control the goodies with the goodies themselves. Some political figures like to attack corporations, and some others think they're just dandy. Both groups are misguided. Corporations do make the perfect boogeyman, though. Deborah Small of the University of Pennsylvania and George Lowenstein of Carnegie Mellon University have run experiments to learn if people react differently to what they call identifiable victims compared to statistical victims. Identifiable victims are specific, concrete people and things, like a person in a photograph or a named person. Statistical victims are faceless, nameless people and things. You can probably guess what they find. They show that people are more sympathetic to identifiable victims than they are to statistical victims. Legend has it that Alfred Hitchcock, perhaps the greatest maker of scary movies ever, used to say, "Never show them the monster." Hitchcock knew that the unknown is always scarier. Politicians and commentators can claim that faceless corporations don't pay their fair share of taxes or that they make too much profit. It all strikes me as silly. They're confusing the shareholders who own the corporation with the corporation itself. As an investor, of course, you get to decide where to invest your money. You might not approve of certain activities and refuse to support them. Maybe you think gambling is wrong, or you don't want any part of an aerospace company that builds defense weaponry. That's perfectly fine. It's your money. I said earlier that I like to think of corporations as just a bag of goodies. I never want to confuse the managers who control the goodies with the goodies themselves. Bernie Madoff founded and headed Bernard L. Madoff Investment Securities, LLC. Madoff pleaded guilty to defrauding thousands of investors to the tune of billions of dollars. He was sentenced to the maximum penalty allowed by law, which is 150 years imprisonment. I'm not here to quibble about whether Madoff is a bad guy or a good guy who just made mistakes. No, my point is that Bernard L. Madoff Investment Securities, LLC, isn't to blame. There's no point in getting mad at it. The telephones, computers, and desks that comprised the corporation were just goodies like telephones, computers, and desks. It's true that at least one employee and owner of the company put those assets to bad use, but it isn't going to do any good to put the telephone in prison, is it? Part of the confusion traces to the way we use language. We use shorthand all the time. We don't say, the people who own Ferrari hire people who make exotic cars. We just say, Ferrari makes exotic cars. Most of the time, that's perfectly fine. Sometimes, though, it can lead to bad decisions and bad policy. For example, if a politician says that he wants to make corporations pay their fair share, then some people are going to like that, and some people won't, and that's fine. What's not fine is if people think that if we tax corporations more, then we can tax people less. Life doesn't work that way, I'm afraid. If the government taxes Multimower an extra $1,000, then you and Carl wouldn't have been able to receive those funds as a dividend. Maybe that's what people want, and maybe it's not. The point is that making a corporation pay more taxes is just another way of making people pay more taxes. The next time you read a business article or watch the financial news, see if you can find examples of the concepts we learned today. You're sure to hear about this or that company's stock trading up or down a few dollars per share, and you might hear somebody confusing a corporation with the people who manage them. You might hear about a stock issue. Individual companies don't issue new securities that often, so when they do, it tends to make the news. See if your new knowledge of securities doesn't start to make the business of trading them feel a little more understandable. In this lecture, we learned about fundamental securities, stocks, and bonds. In our next lecture, we'll learn some of the basics of stock markets, the institutions that let people like us buy and sell those securities. I have good news for you. Although these markets are high-tech and are becoming more sophisticated every year, the basics are a lot like markets we encounter every day, such as markets for groceries or cars. That means that you have the main idea already. We can dive into the details with confidence.